Meanwhile, going back to the global markets plunging after Donald Trump defended the tariffs, calling them medicine and warning foreign governments that they would need to pay heavily to lift them. U.S. markets are bracing for their worst fall in nearly 40 years amid rising fears of higher prices, weaker demand, and the risk of global recession. Joining me on the broadcast is Mr. Arvind Mahajan, Lamar Savings Professor of Finance, Texas A&M University. Professor Mahajan, I, of course, begin by asking you, how exactly is the public in the United States of America now reacting to what is being called a bloodbath on the stock exchange?
Yeah, I think the market is reacting. The public is trying to digest the information. I think there is a lot of fear in the market. We have the VIX index, which measures volatility in the stock market, and it has suddenly spiked up. So basically, I think there is just a lot of uncertainty in the market. And it is unclear if the benefits of the tariffs, when they are going to accrue. And so far, the market just sees the cost of the tariffs and it's reacting to it.
And Professor Mahajan, what really, in your assessment, will the next few months look like? Because there was a lot of chatter about inflation, but there is also now some worries about recession.
Yes. And, forecasting having studied the market for 45 years, one thing one does not to do is try to forecast the market because the market has its own dynamics. But one can try to connect the dots in as far as the macroeconomic variables go. And we've had that problem actually for quite a while. The tariffs have exasperated the problem, but the Fed has been in this situation of trying a soft landing because the numbers on inflation have been somewhat mixed. Unemployment numbers have been strong. People expected recession, but that did not happen. And all those things have been exasperated with the tariffs. Tariffs have injected another uncertainty in the marketplace. So what's going to happen over the next couple of years is really anyone's bet. I have been an optimist in the market, was an optimist in 1987 when we saw Black Monday. That was the day when the market declined at 26.4%. We've not come close to that yet. S&P is down close to about 19%. We'll see how the market ends today. But things are pretty dire right now in the market, but the market can turn around as well. I mean, the issues, the unknowns remain very much what they were over the last couple of years. Unemployment rate, employment has been very strong. Inflation was coming down, slowed down, is slightly going up. Anticipation is that the tariffs will make the inflation go up again, which complicates the job of the Fed because it cannot reduce the interest rates. But with the market going down, Trump is insisting that the Fed reduce the interest rates, and easy monetary policy does help the market. So Fed is in a fix as to whether to increase the interest rates or reduce the interest rates. Consensus seemed to me a few weeks ago that you could only expect one or two reductions in interest rates at all. I think they have gone up to 3 to 5. So there's just a lot of uncertainty in the market at this juncture. And at a more fundamental level, it is unclear how other countries are going to respond to Trump's tariff initiative. The expectation is, and that is what the administration is hoping, is that other countries behind the scenes will come and reduce the tariffs significantly so that the US does not impose the tariffs. And some countries have already started those dialogues, that conversation, but it's really unclear how much of that will happen, and that's going to take a while for things to get sorted out. In
Yes.
particular, in the case of China, for example. So, right now, things are in a serious flux, and smart investors are just waiting to understand what is going on rather than reacting to the market.
Okay, all right. Thank you so much, Professor Mahajan, for joining us on NewsX World.